Hi there, traders. Now, I just want to give a bit of a quick response to a few traders that were asking me, hey, why aren't you trading the non-farm payrolls on Friday? It's a big number, right? Can't we make loads of money out of it? I've been trading for 35 years and the non-farms, yeah, occasionally you can get into it, but otherwise it is just a graveyard for traders. And Friday's numbers were no different. Check out the price action here on most of these major currency pairs. Now, the first 3 or 4 hours here, even dollar Swiss, right? Where you've got a resistance level on the top side, but nothing in between. Liquidity gets pulled out of the market. You've got to sort of then assess the actual overall outcome of the numbers. Now, there's 6 to 8 key variables here. Now, the market, we do talk about the non-farm payrolls and the unemployment rate. These would be the two top tier numbers. But there's another sort of 6 different variables that could impact the number. Now, we had slightly weaker non-farm payroll change. Then the unemployment rate was as expected. Then you got weaker manufacturing numbers, you've got stronger average earnings, etc., so forth. And then you got to consider, right, the interest rate perspective or the forward guidance from the central banks. Now, the market is looking at a 50 basis point cut from the Fed, right, on the 18th of September. Now, these numbers were, I'd say, on the weaker side. And we did see the initial reaction here. If I just zoom into euro, you can see where the range here on this hour, yeah, the dollar fell. The fact is, because the numbers weren't terrible, only going to be cutting by 0.25%, not 0.5%, right? So that sort of moves towards a stronger dollar move. And even if you think you're going to get that right in the first 10 minutes, well, good luck. But you know what? The actual currencies didn't really move for about 4 hours after the actual number. Okay, so you've got to be very careful what you wish for, right? Of course, there are situations here after 4 hours. Yep, sterling was testing that support level and then broke through. The Aussie was a little bit cleaner, right? The risk currencies got hit. And dollar CAD, well, with that dollar move, right, very hard to trade the Canadian numbers with the US employment numbers all at the same time. The Canadian numbers were weaker. So we did see a significant move up in dollar CAD. Don't forget the price action here, especially around that resistance line, was incredibly difficult, right? So don't believe all the hype out there about the non-farm payrolls. It is a big number. And if the central bank is telling us they're looking at the numbers very closely, well, it will have an impact. But the problem is liquidity at the time of the release disappears. Like the banks who provide the liquidity for all of us to trade, they know what's going on. They pull out the liquidity, right? And you have a situation where you can have almost 100-point spread, right? Or movement on the actual release. For you to survive that, you've got to have a massive stop loss. And that is putting your account under jeopardy. So I just want to come back and sort of reiterate for most traders who are new to this and are looking at the hype and trying to follow traders who are saying, you'll come and watch me trade the non-farms. Man, this is an absolute graveyard for traders, but it does give us answers to what's going on. And that's what you need to be focusing on. If you check out the daily charts, right, you wouldn't even know there was a major event. And that's where the key direction comes from. When you're trying to execute off the hourly charts, okay, if you don't have like technical levels, and even if you do, look at that false break there above 111.40 on euro. You've got like movements up and down through trend lines all over the place. It is a recipe for disaster. But now we know exactly what the Fed's doing. Now it's a great time to trade. But for a lot of traders that I see and I've spoken to, they are asking me, oh, I've lost 4 grand, I've lost 5 grand. Okay, don't trade the event. You don't trade every economic data event that comes out, right? If there's a good setup and it's got implications for what the central bank may do afterwards, then sure. But maybe after the release, right? Trying to guess what's going to happen, especially on the non-farms, is an absolute recipe for disaster, right? So take this release as one of those learning lessons and sit back. You don't need to try and cash in on a Friday on the angriest, crankiest number in the market. And it will really smash your confidence and your account balance. All right, guys, let's learn from this one. Good luck. Cheerio.